Goldbroker.com own real physical gold and silver bars stored outside of the banking system.
Good morning, ladies and gentlemen. My name is Dan Popescu, and on behalf of goldbrokers.com, I will be interviewing today Gary Christenson of Deviant Investor. Gary is the owner and writer for the popular and contrarian investment site Deviant Investor and the author of the Kindle book Survival Investing with Gold and Silver. He also just came out with a new book, Gold Value and Gold Prices, 1971 to 2021. He's a retired accountant and business manager with 30 years of experience studying markets, investing, and trading. He writes about investing, gold, silver, and the economy and central banking. His articles are published on Deviant Investor as well as other popular sites. Many years ago, he also did graduate work in physics, so he strongly believes in analysis, objective facts, and rational decisions based on hard data. Good morning, Gary.
Good morning.
How are you?
Doing fine, thank you.
Okay, Gary, let's look at the gold market right now. What do you think about the gold price in the recent days and the future? And do you think the political events the geopolitical events will have an influence on gold?
Well, I think geopolitical events always have an influence on gold. I think that international money flows, I think all the money printing that various central banks around the world are doing have a huge influence on gold. And I think that, let's see, I believe Jim Grant was the one that said that gold is sort of the inverse of the world's faith in central banking. And as long as we have confidence in central banking, as long as we have confidence in our various currencies, then gold prices will stay relatively calm. But if that confidence ever starts to evaporate, then we could see some massive jumps in the price of gold. And I think that's what we saw in late 2010 and 2011 when gold finally rose to well over $1,900, to I think 1923 about, as the peak in August of 2011. I think confidence was a little shaky then, and since then it's gotten better, and consequently the price of gold has gone down.
Do you think we're in a correction right now, kind of a bear trap in this long-term bull market that you, if I look into one of your charts from the book that started in the 1970s with the breakup of the Bretton Woods?
Yes, I do. I wrote an article here about gold prices in three waves, and I tried to take gold prices and cut out as much of the noise and much of the daily manipulations, the weekly manipulations, the weekly contrivances that all of the various factors impose upon it, and just look at it as three basic waves. The first wave up to 1980, the second wave down to roughly 2001, and the third wave up from there. You put it all on a log chart, and the gold prices fit very nicely in three waves. And the conclusion from the chart is that, and of course you don't know for sure, but it seems to me that most of the evidence indicates this direction, that gold has been in a correction since 2011 and has come back down to the lower end of the trend channel and should be moving up over the next several years. I don't know whether that means tomorrow or 2 months from now or even 6 months or more, but I do believe that the long-term trend for gold is up, and the long-term expectation should be much higher in price.
What is the methodology that you're using for those projections? Is it more technical analysis or fundamental, or what we call a fusion analysis, which combines all of them?
Well, okay, probably some of both. Let me answer that, but I'll try to be very brief. I like technical analysis. I look at indicators and oscillators that indicate overbought or oversold conditions. And I'd say that gold was seriously overbought in 2011 and seriously oversold now, most especially back in December of 2013 when it hit a low of roughly 1180. So I like technical analysis for overbought and oversold indications. I like putting charts onto long-term trends and looking at them both on arithmetic charts and logarithmic charts to see what the big picture trends are and try to filter out all the noise that sometimes is nothing but confusion. And the third thing I do is I like to try to relate the price of gold to other things. And that means, for instance, a ratio of the Dow to gold, or gold to silver, or gold to crude oil, or gold to housing prices, or any number of things that I can find that are relevant. And in fact, that was the type of thing that I did in that the book that I've just got out, Gold Value and Gold Prices. From 71 to 2021, I related the price of gold to other macroeconomic variables, and then created a formula, and then tried to match the formula using an empirical process to the actual smoothed prices of gold since then, and had a fair degree of success with it. And that's why I said then we can project out to the year 2021 and have some degree of confidence that the price of gold will be going up into that period of time.
What price target approximately you have for that date?
Well, okay, I'll give you my price target and say that I'm in good company by people that are highly respected. Jim Rickards, wrote a book, The Death of Money, and his price target in that book is $7,000, $8,000, $9,000, $10,000 for the price of gold. He believes that the price of gold will have to be reset to some number like that in order to keep the financial system working. Jim Sinclair, of course, Mr. Gold, with 40-some years of experience in the gold market and very highly respected, has talked about $10,000 gold. Again, it's a round number estimate, and what it's trying to say is that people are saying, well, the price of gold can easily go much higher, and by much higher, I don't mean $1,700. I mean much, much higher, $5,000, $7,000, $10,000. There's other ways of calculating it. If you compare it to the number of dollars or euros or yen in the system, then you come up with very large numbers like $10,000 also. And in my book, I provide what I consider a rational and defensible analysis for a similar number that is considerably above where we are now. And of course, we're not going to reach that in the next year, but it's certainly plausible in the next 6 to 10 years. And that's the reason, or the rationale and the process I use to create a number like $10,000.
Do you think that the $10,000 projection is related with the collapse of the US dollar?
I do. I believe but I don't think we should say just the US dollar. I think we should say all unbacked paper currencies. But certainly the one with some of the most to lose would be the US dollar, in my opinion.
So you expect some kind of run on the dollar?
Well, I do, but again, I don't know when. I can't believe that it could be too far away. We've printed so many dollars that at a certain point, some of those have to come back. And one of the scarier things that I think you even mentioned in your last article was what happens if the Saudis or other, as is currently happening, stop accepting dollars for oil. Wouldn't that then seriously weaken the standing of the dollar as the world's reserve currency, and possibly allow lots and lots of dollars to come back into the United States that then would need to be put somewhere and run asset prices up? That would, I think, weaken the dollar in the world standing and run up gold and silver prices.
What kind of gold do you recommend? Do you recommend people, based on those projections, buy physical gold or ETFs? What is your preferred means of investing in gold?
Well, I would have two preferred means. I'm a little skeptical of ETFs because they're ultimately digital, and I don't mean that I'm not insinuating that the gold that supposedly backs the ETFs is not there. Certainly there are other people speculating on that, but what happens if an ETF is in the systems such as MF Global, and then MF Global or another one collapses, and your assets then are gone because of the intermediary, not the ETF itself, but the intermediary between you and the ETF. So I like the idea of gold that's in your hand, or gold that's stored not in a bank, but in a private vault. say Hong Kong, Switzerland, or Canada, or Utah, or whatever, gold that's stored in a private vault, or gold that you physically have safely stored in your home or some other place close. But I'm a little more skeptical of paper gold.
If we look right now, the U.S. stock market is still going up, and everybody seems to believe that even if it's overvalued, it's still going to go much higher. Is it compatible that gold goes up at the same time, or do you expect that once gold explodes, that the U.S. stock market collapses with the U.S. dollar?
Well, I think that there isn't a simple answer to that. The gold can certainly go up at the same time as the stock market, and I point to the period of time from 2008 to 2011 as a time when the S&P went up. The S&P went up from the high 600s to about 1,300. At the same time as gold went up from the about 700 to about 1900. So they can go up together. But then, since 2011, gold has gone down and the S&P has continued its massive rally. So I don't think that there's a simple and direct relationship between those two that you can point to and say, I feel confident this is going to work. I don't think it's going to work that way. I do think that we can have the S&P continue a little while longer and gold languish here building a base. But my preferred scenario is that the S&P fairly soon, and again, I don't know if that's weeks or months, but fairly soon peaks and falls, and gold reverses from its base building and goes up. And I just happened to be looking, since you bring up the S&P, at a chart of mine here. It's a 20-year chart based on monthly prices, and when I look at it, what I see going on an 82-month cycle, which is roughly 7 years. I see a peak in 1994. I see a peak in the year 2000. I see a peak in the year 2007. And I see a peak in the year 2014. And following each of those peaks was a substantial fall. That certainly doesn't prove or guarantee that a fall is imminent, but it should cause people to think that there is some risk here. And yes, the S&P is overvalued. It's been on a long tear for a long, long time. It could reverse at any moment. And based on this 82-month cycle, which is roughly 7 years, now could be it. We'll have to wait and see.
You wrote also recently an article about U.S. gold in Fort Knox. If it's still there, if it's secure. What do you think about it? There is a lot of talk that the gold that the U.S. has, it's not there anymore, or it has been leased out and has to be bought back. What is your view about it?
Well, again, I speculated on that, and I use the word speculation because I haven't been there. I haven't done an audit. As far as I know, the gold hasn't been audited since the 50s, roughly 60 years ago, and that should cause people to ask the question, why hasn't it been audited? And so that should be a cause of concern for that gold. But the second point I make in the article is that the U.S. government spends roughly $3.5 trillion per year and adds nearly $1 trillion each year to national debt. The official 260 million ounces of gold, that's supposedly what we have. That's the official spread out over, I believe, 4 different depositories. At current prices would only be valued at $340 billion. In other words, the President and Congress can burn through the market value of all of that gold, assuming it's all there, in slightly more than a month. So you have to ask the question, really, how important is that gold to our financial establishment, to the central bankers, and to the government when the paper mill that we run as a financial system burns through the value of all that gold in slightly more than a month? Really, and then the Federal Reserve has created something like $3.5 trillion since, based on their balance sheet, since 2008. And again, if the market value of the gold is only $340 billion, that's 8 to 10 times what the value of the gold is that the Federal Reserve has just in effect snapped their fingers, punched a couple of keys on the computer, and produced $3 point some trillion of new money. So how important is that gold? In my mind, it should be very important. But I think in the mind of our leaders, it's not very important.
Do you expect some kind of a confiscation of gold by the U.S. government?
Well, again, a matter of serious speculation and difficult to estimate. My personal estimate, for what it's worth, is probably not. Wouldn't it be far easier to confiscate the funds in pension plans or IRAs, or not call it a confiscation, just say a required safety investment in, say, T-bonds? That would be far easier than confiscating gold. And why wouldn't government take the easy way out rather than the more difficult way out? And particularly as if the entire U.S. gold hoard is supposedly only $340 billion, confiscating the citizens' gold can't be anywhere close to that, whereas there's something in the neighborhood of 20 trillion in retirement assets that are available. I would think that the easy money, the easy pickings, is retirement assets rather than gold. So my inclination is probably not confiscating gold.
Okay, yeah, that's my view also, that contrary to the 1930s, today most of the money of available for confiscation, it's in pension plans, in all the different retirement systems that, and the government has a very easy way to block it, postpone any payments from those accounts. So you expect something like that to happen?
Well, I don't know that I expect it to happen, but I expect that it's far more likely than a confiscation of gold. I think that government will do what government needs to do to maintain its own power and to maintain its own control over the financial situation. And if everything is rosy, then maybe the drastic methods aren't needed. And if things aren't so rosy, and right now I'd say they're kind of risky and kind of dangerous, and maybe it continues just fine for a number of years, but maybe it gets pretty grim in the next few years, and then all bets are off as to what government can do. But you have to assume that they will go after the easy money first, and gold doesn't seem like very much or very easy, whereas pension plans do. So I'm not suggesting that that's imminent or likely, but I'm certainly suggesting it's possible.
What is your point of view concerning the debate between deflation and hyperinflation? On which side do you think we're going to have hyperinflation? Is it going to be just in the United States or worldwide? Or is it going to be deflation that's going to collapse the system?
Again, a very difficult question. And I read a lot of things from a lot of people, and I see absolutely adamant and highly intelligent assessments that hyperinflation is the more likely. And then I read other people that are dead set on the deflationary camp. My inclination is that the central bank has the capacity to create money and obviously is able and willing to do so. My inclination is that the governments of the world, witness Japan, witness the United States, witness Zimbabwe for that matter, clearly has the capacity and the inclination to destroy their currency if they choose. And we have all these massive debts in the world, and one of the easiest ways of dealing with those debts, even if it's a short-term and short-sighted solution, is to inflate the currency to the point where you pay the debts back in cheaper currency. I have to think that's the more likely scenario. Maybe not the only scenario. Deflationary collapse is an accident that could occur. I would think that a deflationary collapse would be an absolute disaster for the world economies and for the peoples of the world, much like the 30s in the United States. But I also think that an inflationary, hyperinflationary event is also a disastrous thing, as many countries throughout the world have experienced. I just hope the world can find some way to not go in either direction and just gradually inflate the currency. But clearly inflation is the more likely from my point of view.
What do you think about the role of China in the gold market? It seems to be very secretive. We don't have much information. There is some speculation that they might have between 4,000 tons of gold already, or even closer to 8,000. Do you have how do you see the Chinese role in the gold market?
Well, I pretty much agree with your implication on that. The last time they published a number, as I remember, was 2008 or 2009, in which they published a number of about 1,000 tons. And they've published no number since then. Clearly, they choose to keep it very secretive. Much speculation about how much gold they have imported. And I've seen those same numbers of 4,000 tons up to 8,000 tons. Nobody really knows. And even when they do report a number, I'm not sure anyone will believe it. But clearly they're importing gold for a reason, and they're importing gold because they believe it's an important asset that they want to hold, and probably because they consider it a counterbalance against unbacked paper currencies that can be inflated at will. So I think what China's doing is certainly sensible from that perspective, and indicates that they see the long-term value of gold, even if the rest of the Western world does not.
Last question. I would like to ask you also about silver. The relation with gold. We very often talk about gold, but not very much about silver. Silver seems to follow gold. Do you think it could lead at one point and give us a signal, or is it going to be a lagger and waiting for gold to give a signal?
Difficult question. My impression is that there's really two parts to that question. The silver to gold ratio right now is roughly 65 to 1, or gold to silver ratio is roughly 65 to 1. And throughout history, that number has been much smaller, and occasionally larger. I think that the long-term implication is that the ratio must drop, and I use a number of, say, 20 as a typical target, which means that you could expect that while gold may go up some, silver may go up a lot, and that would be my expectation. But in terms of the timing, when you were talking about leads and lags, as I've read the markets and as I have read the charts for the last 30 years, it seems that more often than not, gold starts moving, silver follows, then silver catches up, and then silver speeds off into a parabolic blow-off, and then collapses, of course. So silver lags and then silver leads. And once that ratio starts dropping, you're getting, and dropping I mean down to numbers like 15 to 20, you're getting close to a market peak. And once it's in a very high number, like say 65 and 70 like it is now, or at its absolute peak around 100, which I believe was back in the about 10, 15 years ago, you know that you're at a market bottom. So again, I expect silver to outperform gold over the long term. I expect silver to lag in terms of timing and then gradually catch up and then accelerate much higher than gold in general. But we'll have to wait and see how it plays out.
Okay, Gary, I have a lot of other questions, but unfortunately we're limited by time. I'd like to thank you, and at the same time, I would like to remind our auditors that you have a new book out, Gold Value and Gold Prices, 1971 to 2021, a very interesting book, and I encourage people to read it. Thank you very much, Gary, again, for accepting our invitation.
Well, thank you very much for a very good interview.